Currently, the UK property market isn't really growing. And in real terms, you're actually losing money on your house.
That can't be right, because the average UK house price has increased by 2.5% to £271,000. And that's in the last 12 months leading up to November. So how am I losing money?
Yes, house prices have risen by 2.5%. But if we look at December 2025 inflation figure, measured by CPIH, that was 3.6%. So, over the last 12 months, your house has increased slower than the rate of inflation. Let's look at this graph showing UK house prices adjusted for inflation. Between 1996 and 2004, house prices absolutely rocketed. That's where people in the UK really got rich from property. Think of it like buying Bitcoin for $1. Okay, that is a massive exaggeration, but it does help explain the point. That is where the real growth happened. If you look at today's inflation-adjusted prices, we're actually much closer to 2013 levels.
Just before we continue, we release videos every week on personal finance and how to better manage your money. If you find this content helpful, then hit like and subscribe so you don't miss out on any future tips or advice. I still don't fully get it, because if my house was worth 200k last year and it's worth 202k today, then how am I not better off?
Well, you might be better off on paper, but because everything around you has gotten more expensive, the money you have invested in your property now actually buys you less than what it did 12 months ago. This is often referred to as a silent crash. It's actually perfect for politicians. Homeowners are happy because their house prices is going up on paper. But houses can actually become more affordable for first-time buyers, if and only if their earnings are increasing faster than inflation. To see whether this is true, let's look at this graph showing UK first-time buyers' mortgage payments as a percentage of take-home pay. In the late 80s and early 90s, that was close to 50% of someone's take-home pay. Now in 24 and 25, it has dropped to just over 30%. That's a massive positive for first-time buyers.
So, if first-time buyers are spending less of their monthly income on mortgage payments, then why does it feel so hard for young people to get on the property ladder?
So this is slightly opinion-based, but I believe it comes down to the deposit and how much you actually need nowadays. With the UK average house price at 271k, and many mortgages still requiring a 10% deposit, you need at least 27k to even get started. For the average person, that can take several years to save. And who knows what house prices will do during that time. In the mid-80s and early 90s, 100 or 125% mortgages were actually quite common. But that all changed in 2008 when the housing market crashed. Now, we could do a whole video on this, but to put it simply, mortgages were being handed out to anyone who wanted one, even people who couldn't afford the repayments. And after millions of homes were repossessed, that was effectively the end of the 100% mortgage.
So all of this is impacting someone who wants to buy a house. But what about someone who's trying to rent?
The average private rent in the UK is £1,368, an increase of 4% or £52. But this varies massively by region. In England, the average private rent was £1,424, up 3.9% or £54. In Northern Ireland, it's £873, a 5.7% increase or £47. Scotland has seen an increase of 2.8% or £27, and Wales has seen an increase of 5.7% or £45. However, looking at national averages can seriously misrepresent what's actually happening in different locations. If we zoom in further on England, London saw a 2.1% increase to £2,268, or an increase of £47. But the North East saw an increase of 7.9%, or £56. And this is the big story of the current UK housing market. London used to see the biggest rises in house prices, but with work from anywhere taking off, and many people only going into the office if they need to, the London housing market has taken a massive hit for both buyers and renters. Depending on how you're looking at this, You could see this as just a correction, because renting in London for most people is nearly impossible.
But what does all of this actually mean for me? What should I be looking at?
The first thing is deciding whether you want to buy or rent. Then you need to decide on location, because as we've just seen, prices can change drastically depending on where you pick. All I can say is what I would do personally based on my situation. With the current market, I would actually rent. That's only because I invest quite a bit into the stock market, and I currently don't think UK housing market is a good place to invest. However, if you believe you'll miss one investment payment over the next 20 to 30 years, then buying is probably the safer bet, because that payment is directly linked to keeping a roof over your head. And who actually knows what's going to happen in the next 10 years? In 2008, no one knew the housing market was going to crash. And in the next 10 years, the housing market in the UK might boom again. Well, on that note, I hope you enjoyed the video, and I'll see you in the next one.